first monthly time frame of GBP USD, and this was the top and this was bottom. And if we see this chart pattern and do wave counting ABCDE, then this chart pattern has been ended, and this was last bearish wave when Fed was doing QT monetary policy. But next year things will change. So monthly time frame, price is making double bottom first, and we saw a big rejection from this level and a change in central bank monetary policy. So next upside target will be upper trend line of this chart pattern. And if we go to daily time frame, then this pair, this was double top and this was bottom of this trend, and right now price is in the middle because this trend has made 50% retracement level, and this resistance level is broken. Next resistance will be 26,476, but target main will be 61% retracement level. Since this complete bearish trend has made 50% retracement level, so this is not a good place to buy, because on retracement level seller sell, and we can see dollar strength in last week and first week of next year, but technically it has made 50% retracement, and next will be 61 because this week we have FOMC, and if Fed sound dovish again, then this pair can jumps again. And if we see H4 time frame, then this ending diagonal chart pattern same like last week, and this chart pattern has reached 50% retracement level. So when this ending diagonal chart pattern ends, price drops very fast. So 100% projection for this wave C is already broken, and next target is 38% projection, and in the middle we have 50% retracement level. So somewhere in this resistance zone price can make resistance, but based on seasonality the good timing will be week after FOMC. Then after a retracement we will buy again and will target new high. And if we see USDCAD, then this was your top, and price has made 61% retracement level and now making resistance. It tested both level 50 and 61, and this trend line tested 3 times, and if comes down again then you can buy and will target new higher high. But after FOMC meeting this week, if dollar drops again on Fed comment, then after 61% retracement, you know next target will be new lower low. In that condition your first entry is 61 retracement level, and you can get another selling opportunity on breakout of this trend line, because dollar pair were going up when Fed was doing QT, but that trend will be opposite next year. So once this pair make lower low, lower high, that will be clear confirmation of dollar trend reversal, but for beginner trader that will be too late. And if we see USDCHF daily time frame, Then this was your horizontal resistance level. It make fake breakout, made double top, then came down, because that was the time when central bank were selling dollar, and now Fed is decreasing their rate hike size. That is clear confirmation that soon central bank monetary policy of Fed and other central bank will change, because these central bank, when they were selling in September and October, they already know, because they are insider, but now everyone know. So we can see upside correction after FOMC week, and this horizontal support level, first it bent up and tested the support, and now it is coming down. This support level and this yellow trend line both are broken, and if we see H4 time frame, then this was your wave count, and trend was ended with ending diagonal chart pattern, and before that it made double top, and you can see aggressive selling on this pair. But right now on H4 time frame we have this trend line, and it has been tested 3 times, and if trend lines holds in retest again, then you can buy, because before next big selling, when Fed will stop hiking interest rate, there will be more selling in dollar, but before that we need upside correction. So you can expect upside correction in dollar after FOMC week, because next selling on this pair will be when it come down, retest the support zone, or if it goes up, make retracement, then people will sell. But based on seasonality, there is possibility that in beginning of next year 2023, in first few week, dollar can strong again, and USD JPY H4 time frame. Yesterday I explained all the JPY pair in detail. There is not a big change here. This was the first big drop when all of these central bank together were selling dollar, while in the news they were lying, but that was coordinated selling by central bank, and now Fed is saying that they will decrease rate hike size from 75 to 50 this week in FOMC meeting. So this was selling opportunity, and in beginning of next year few week, wait for counter trend correction, which can be zigzag or chart pattern, then we will sell again. But right now these support and resistance are your clear level, and use price action and trade breakout and retest. But movement of all of this pair depend again on dollar index, and correction can come before breakout of this support or after breakout, but there will be correction in this aggressive bearish trend before we see next sell off in dollar.